Good morning, traders from Chicago. It's 8:01 a.m. Chicago time on Tuesday, the 2nd of March, 2021. This is episode number 1947. A reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, first things first, I've adjusted the sound settings on this fancy headset that for some reason the volume on consistently changes. It should be set now. Please provide some feedback. Let me know if it's nice and clear or if it's too hot. Let's dive right into the convergent trading pre-market summary sheet. This morning, really back and forth market overnight. The overall posture is neutral. The equities are slightly down. You could see the European equities, the Euro stocks, and the DAX are relatively strong, up 0.46% on the Euro stocks and 0.61 on the DAX. Crude oil is above $60 again, trading at 61.07 or 0.71%. Crude fell off a little bit yesterday to test just below that $60 figure, and now it's up again. Gold has moved away from the 1700 level that it tested, I believe it was yesterday, to pop higher into 1727, up $4, 0.23%. The laggard today is silver. Silver is down 26 and a half cents, trading at $26.42 currently, or 1% lower. The Russell's weakest, the small caps are weakest, followed by the NASDAQ. The NASDAQ's only down 19 points, which, by the way, for the NASDAQ is less than one rotation, as you could see on the gray chart on the right here of the summary sheet. And NASDAQ rotation based on 1 minute 1 minute bars 20 sessions back is 28 points. Pretty much unchanged there. The 10-year note is up 3.5 ticks, and the bonds are down 2 ticks. And that's where we stand. Pretty relaxed overnight session, even though we did drop a fair amount, and have recovered in the S&Ps as well as the NASDAQ, and pretty much across the board. The Russell remains a laggard, but overall, the overnight session has traded 285,000 contracts. The overnight inventory is mostly short, 92%. The range 40 and a quarter points, a multi-distribution profile, pretty nondescript profile so far. However, one thing to note is that the overnight point of control is at 38.85, which is right there in between 38.88 and the 38.80, which was yesterday's long target. Delta is positive this morning, and we'll dig into that for the minute. Again, the $1.9 trillion stimulus plan is front and center. And then the vaccines, with J&J promising to deliver 100 million doses of its single-shot vaccine to the United States by, I believe, June, if I'm not mistaken, if I recall right from the news. And also, the other thing that is really important right now is bond yields. Bond yields also taking center stage. So I want to talk about that in just a bit. So that's where we stand. Let's take a look at what was expected yesterday versus what we got. Yesterday, we were opening right on the edge of the prior day's high. The expectation is we would open right inside of the prior day's high. That didn't happen. It actually opened just above the prior day's high, Friday's high, ending the one-time framing down. The expectation is a strong push higher on the open, as you see on that green line, and then a potential retest down. But overall, the key target is 38.80, as discussed yesterday. This brings up a question Someone had looked at the trader bite and they're like, oh, yeah, got to 38.80 and it blew through. Your plan didn't work. And I'm not sure what's confusing here about what I'm saying, but I did not say that 3880 is going to stop the market and that's a short location. Although on a first test, it's not a bad one. Again, when you're trading against the trend, the trades against the trend or the fading, what are called fading trades, fading the trend, those should be short term trades or scalps. Trading with the trend should be structured trades. In other words, you hold your stop and you look for runners. You're building a position into a runner to see how far it'll go before it starts to counter rotate or counter impulse. So the idea behind yesterday is that we are likely to test this high volume node here at the 3880, and it sure did. Scenario one was on point. We did open outside, but here's what we got. We opened at 38.59. We pushed to 38.58 on the open, and then we pushed straight up, pulled back to the prior day's range, just as we had outlined in this area here. Expect it to retest that range and push back. Could not get back into the range. Could not get below the 58 high. 58 quarter high. We had already broken the one time framing up. So the one time framing down, one TFD, that's already been broken. So the daily trend is higher. And so it's all about finding a spot to get long and hanging on. And what it ended up doing is it ended up pulling back to zipper locations multiple times, staying ahead of the VWAP and mid, providing a couple of decent opportunities to get long, and then we finally get the impulse. It impulses right into 38.86, back to 81.50, and then it continues from there. So overall, it got to the 38.80, but it did not rest there. It just broke right through, pulled back to 81.50, and continued higher all the way up to 39.12. As you already know, since we have completely played and gyrated in this area a lot, the areas above are 38.80, 88, 98, and '09 being the key figure. '09 is the key figure above 39.09. That's the MC point of control from 2 weeks ago, and an important area to play. So the next area, once it pushed through the 38.80, was the '09, and it went to 39.12. It's really hard. It's really hard to predict. In fact, it's impossible to predict how far it'll go, and that's why it's easiest to trade multiple contracts and to hang in with a runner to scale out bank risk or fund the trade or finance a trade and then hang on with risk and look for clear indications of failure to continue in your direction. And my way of doing that is to look for counter rotations. And you could see that once we got done with the early counter rotation, this 9.75 point move down, it was all strong positive rotations, little pullback here, but the positive rotations are much stronger than the negative, right? The negative rotations or down rotations pretty much were quiet, were relatively muted until the top was put in, until this point here. Then we start to expand the negative rotations, and the positive rotations are become emaciated. And this basically signals that it's time to bail on the longs. That it's no longer rotating or it's no longer advancing properly. Watching rotations, this pane down here is extremely important to me. The rotations really tell us the internal condition of how price is advancing. Remember, the auction is just a price discovery mechanism. It's what the market is. And the way it does it is by rotating through prices. And so that's what we have. As we rally and we see that the counter rotations are really weak, we stay on the long side. Okay. So that's where we stand. Scenario one's all good. What did we end up doing yesterday? What's interesting about yesterday is here's the open, here's the close, here's the relative delta at the open at 0. Here's the relative delta at the close. As it pushed up, it looked like, as it broke above 38.80, it looked like it was just not able to, it was that there was aggressor sellers on the way up. Basically, offers being pulled for prices to move higher, and there's some aggressor sellers, some negative delta coming into this. So the expectation here, because of that, as a result of that, when we have a divergence between the way price moves and the delta moves, it not always, I want to be clear about this, not always, but in general, it tends to describe a market that is progressing in price, but is not doing so with the full support of volume, especially lifting volume or aggressor volume. So in that situation, it doesn't mean that it will not continue. I don't expect it to continue higher, but I expect those rotations higher to be relatively weaker. Okay, and so that's what we had coming into the close yesterday. The point of control held below the 3,900 figure at 38.97.75, and the close was below 3,900. So even though we explored up 39.12, we really came right back below the 3,900 and held below it into the close. Hard to tell what to expect next, but again, with the delta kind of moving opposite price, look here, price going that way, delta moving down. The slope of these lines is meaningless, of course, because I can always change the scale here and shift these prices up to make the scale more prominent for one or the other. So don't pay attention to the slope or anything like that. But the fact is, as price was moving up, there was some selling on the way up, some liquidation of longs, long liquidation on the way up, it seemed. Okay, it seemed to me. So we moved away from the bottom pretty good. We had a pretty decent auction. We had pretty good structure yesterday. We really didn't seem to leave behind much in terms of singles, except at the bottom. We left a single at 38.73 and a quarter. And then overnight, we ended up pushing all the way back through the 38.80 and bouncing back up. And now we're basically in neutral territory. We're holding above the overnight point of control, which happens to be on top of, which happens to have the full session VWAP and full session mid right on top of it. So there's a lot going on here just below at 38.85. It's also in line with yesterday's mid and so on. There's a lot going on at the 38.85, and we are trading above it by 10 points up against the 3,900. Based on my opinion, is pretty precarious place to open today, and it's opening dead center in balance of yesterday. Remember, the point of control yesterday was 97.5 or something like that. Let me check that. Yesterday's point of control 97.75. So we're opening in noise. So this morning, what that means and what we carry that forward to mean for our trading is that we need to be cautious on the open. It could go either way. This can be seen as a longer term lower high based on the 29 high, the 45.29 and now 12 high for another rotation down. It could be seen as that, and therefore people, the OTF or the higher time frame may position for that, or this could be seen as lower prices and advantageous price point or value to buy into the break of 12 back to 26, 29, and 45 all-time high, which also happens to be a week high. So to me, this is likely to be a two-way battle on the open. Just come in expecting that and seeing how the market responds. Coming into coming into today, a quick check of what has happened in the overnight session. Again, the different colors, the black background versus the gray background is the month, is the month. And then each box within that month highlights the days of the week. So this is 1 week, this is another week, this is the third week, the fourth week, and this is February. We opened February, the first week of February with a strong rally. Second week of February was where we established 3909 as value. The third week of February is where we put in the 45-week high. And then the fifth week of February, last week, is where we fell off. And then to look at, I think somebody asked me for the monthly profiles, and I forgot to put these on. So let's put those on real quick. These are going to be monthlies right here. There's one monthly composite, and this will be another monthly composite here. And that's, that's one of the prices we tested. One of the key areas we tested, if you recall, is this strong area in the 3792, the MC point of control in this area. 2 days, 2 weeks in a row, we hold the 3792, and then we project that forward, and that was the low last week, just 7 points below after a big move. After 100 points, we moved down to 3785, 7 points below the 3792, and then we had the one-time framing down on the daily, and we broke that yesterday, and this is causing us to have more of a long bias depending on what we do today. Yesterday's low, which remains at 38.58, becomes important. 38.58 is the high of the prior session, basically 38.58 and a quarter. So this 38.58 becomes important, and if we push through the mid of yesterday's session, we are likely to test this, and this is likely to be a lower high, and we are likely to accelerate to test this low. This is projecting way out, but that's how things are looking right now. So we have plenty of support beneath us, the 38.80 and so on, and we have a lot above us that we tested. We tested this 3909 area and are holding in between at a key level of 3900. So that's what we need to come into today remembering. One thing I wanted to show you real quick is this dynamic yield curve chart, which I've been using for years. This is by stock charts. All you have to do is search for stock charts, dynamic yield curve, and this will show you the yield curve. If you don't know what the yield curve is, let me know. But the yield curve is shown here on the left. And generally, we want the yield curve to look the way it does now. There's less risk on the short end, more risk on the farther end. So we expect the farther end to charge more interest or pay more interest, depending on which side of the buy sell you look at. But a flattening yield curve indicates trouble. A negative yield curve or an inverted yield curve spells a probable market that is too hot, that the Fed had to push the short end of the curve much higher and let go of the far end. And so it's penalizing or slowing down business by penalizing short-term loans. And that's how businesses operate, is basically on short-term loans. So this is the S&P chart right here. This is the yield curve, and it goes way back. I don't want to replay it. You can animate it, and it'll show you all the way back to 99 how the yield curve has migrated, but I'm not interested in doing that. I'm just basically going to move through to the February 2009 low, and you can see where the Fed just pushed that Fed funds rate or the short end of the curve really, really down, and you look at the long side of the long end of the curve is nice and high up here. And then since then, and this is really a lot of the cause, in my opinion, of the rally. Since then, look at the S&P rallying, and look at how that long end of the curve. Look at the short end; it's stuck at zero, and the long end of the curve is just being dragged down. Why? That's QE, ladies and gentlemen. That's what it does. It buys. They buy the long dated maturities, forcing those prices to forcing the yield to go down. And then as we come into March 2020 on the pandemic, you could see that the Fed, our friend Powell, started pushing yields on the short-term rates higher, and then the pandemic hit, and watch what he does immediately. Boom! Basically within a week, the short end of the curve just goes to zero very fast, and that, ladies and gentlemen, is what's feeding this crazy frenzy. And here over the last couple days or couple weeks, the long end of the curve is going higher. The short end is remaining where it is. And this is what's being talked about in terms of interest rates going higher and a potential for a correction. I don't believe we're there. I don't think there's a risk of that. I think the market's got a lot of money to consume. There's just nowhere to put money but in the market, in my opinion. And it's likely to continue to buy dips for a while. And that's what they want, right? We create value from nothing by allowing that to happen. Here's what we're expecting today. So that's a short lesson in the yield curve and how it's impacting us. I thought you should know because it's really an important piece right now. The primary scenario today: chop, 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 chop. The overnight inventory is 92% short. Looking for it to push higher. This isn't the right green. That ain't the right green. So I'm expecting it to push higher. I'm looking for it to pull back. And overall, I'm looking for this to run again with the trend, run higher and squeeze through that 3909 and push through to start attacking last week's high potentially at 2750. The 2750 up here is key. That ends the one-time framing down. The 1 TFD on the weekly dash W. That's one-time framing down on the weekly, ends at 2750. Key target up there. But it's likely to be choppy in here in the morning. Chop, 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 right? And then the secondary, I'm expecting this to balance out, balance out the overnight inventory, come back and diddle here in the middle with the overnight point of control, VWAP and mid, move down there, consolidate for a period, test lower, and then just hold steady in this range, probably poke a little bit through the 3900 and hold steady. The secondary scenario is expected to be one that has about 20 points of range and tests lower, but overall holds this area. Okay, that's what I'm looking for. Good luck today, and I'll catch you tomorrow morning. Hopefully, you picked something up today that you can carry into your trading. Good luck.